Yes, the market. So what do we know? I guess it's fascinating. We have something for everyone at this moment. You have obviously an equity market that plunged 25% at the S&P level, 35% at the NASDAQ 100 level, big aggregates. And now they've recovered exactly half of the sell-off. And so the bull can say, you see, yes, sell-offs are inevitable, but by sticking with it, this is recovered and we're halfway back. And the bear can say, see, we had the plunge, it's real stuff. And just because you came halfway back, you still have a very bad year for equities. And now it gets harder because just look at Apple, the stock you two were talking about. Apple's up 32% from its low of just 7 weeks ago. S&P's up 17. And just as you say, Melissa, we're exactly at a level that is being cited by chart watchers around the world. It's an important level. It's the 50% retracement level. If you get into Fibonacci, it's also to the penny where the 150-day moving average comes into play.
So what does that mean? Does that mean that maybe we've seen a bottom, but it's not necessarily a signal that will move higher? I mean, how do you interpret that?
Right. So I was funny. We're always looking, each of us, it's the human condition, well, for an opportunity, which in the market means something that's going to move or prospectively about to move. But we've had a lot of movement, right? I mean, rates have been up for a long time, and then they've re-rated lower, 3.5 to 2.5, just like that on the 10-year. And we know that the dollar was surging for months and months, and then it re-rated lower. And the market has now bounced after plunging. What if we're kind of where we belong? Put quotes around that, meaning plus or minus, that equities kind of go quiet here. You don't always have to be on the move, plunging or surging, right? Advancing or declining. My own hunch is that after all these sort of machinations and gyrations, we're going to kind of go quiet here for a bit.
So in the category of going quiet, or to use another one of your terms, a pair of twos kind of trade, it sounds like you think the S&P falls into that category. Rates, how about commodities? I mean, what are some of the asset classes? What are some of the stocks you think are sort of where they might belong right now, right where they should be?
Right. Yes, exactly. I mean, and it's a curious phrase to use about the market because mostly things are moving. But to answer the first question, if you have to put oneself in the bear or bull camp, because that's the vernacular that the world loves, I remain in the camp that this bounce is not the beginning of an all clear, we're headed to new highs. So my inclination is to reduce exposure if you're a long-only player, to write calls, or for new money to be putting on shorts. In terms of favorite areas of the market, healthcare for me is sort of the number one. It's been that way for a while, and it's only because it has both offensive and defensive characteristics, which we know, right? The big drug companies and the managed care stocks are very defensive, sort of idiosyncratic operators, and that you also have low beta, and you have then the offensive characteristics of biotech, which of course has come roaring back to life. So if one had to pick just one thing to do, that would be mine.